Is this thing on? All right. Happy hump day, my friends. It's time. We got some things to talk about. Some things indeed. Had to bring on my boy. Dan Parker is here. Danny San Diego. That's what we call him. Best Life Home Team. Dan, it's great to see you, brother.
What is going on, Derrick? It is good to see you, my friend. It has been too long, my friend.
Did you know that mortgage rates have plunged?
Yeah, they plunge just like the housing market is going to crash, you know?
Well, I think this was funny because, and I'm making a little fun of this. It's a little clickbaity, I know, but mortgage rates plunge. Notice what they say here. Mortgage rates went to 7.61 from 7.86. That's a 0.25%. Now, I don't know about you, but for me, I don't call that a plunge. I mean, it's nice. There's nothing wrong with it. Nothing wrong with it at all. Love it, in fact. And I'm going to show you in the charts what's happening there and why I've made some very bold calls lately about rates likely to start coming lower now. Highest rates probably in the rearview mirror now, Dan. We're going to talk about that today. We've got a bunch of things, central bank stuff, national housing survey from Fannie Mae, corporations buying homes for Airbnbs, using your 401k to buy a home, yay or nay. What are the pros, cons? We'll talk about all that stuff. And let's go ahead and let's see here. Let me go with
the headlines. Dude, we always talk about the headlines. Another one I saw, and I should have sent this over yesterday. I don't know why I didn't. One that popped up saying home sales plummeted. I mean, they used some other word, which makes you think immediately that values have gone down. Right. Is not what it means at all, as you and I both know. But I'm sure we'll get into all that here today.
100%. Yeah, the words matter, and that's the thing you have to. Oh yeah, we're going to go through the market report too for San Diego, which is really interesting. So we're going to do that today as well. But the words matter. People believe the words. There's a lot of things insinuated out there, and that's why I was making fun of the word plunge. I mean, it's melodramatic. Yeah, have rates gone down? Yes. Does it look like we finally hit a bottom? Yeah, it does. I'm going to show you why here from a technical perspective. This is mortgage bond chart right here. When you look for a reversal in pricing, which you want to see. Yeah.
Sorry, real quick. You say bottom because you're looking at it from a lender perspective. The rest of us are thinking top, that we hit the top and now it's going to start coming back down, right?
Yes, correct. Bottom in bonds means a top in rates. You're right. Inverse relationship between the two. The higher the bond prices, the lower the yield that you're going to earn as an investor, therefore the lower rate you're going to pay if you're a borrower. And so what we want to see, and we haven't seen yet, but we finally have now, Dan, is we've seen a higher high. You'll notice this entire time here, we've been making these lower highs, right? The high for each one of these cycles, this is a daily chart, so this is not some small time frame. The cycle highs have been lower and lower and lower. And that's typical in a market that's trending down. And what you look for is a break of structure, as it's called. And when you want to see one of these bigger levels broken, well, look what happened right here. That's just Friday, busted right through here, broke structure cleanly, a close. And look, no rejection. This is an important point because sometimes you get a break of structure like that and immediately you'll see a sell-off. That typically means it was just a liquidity run. It's not a true break of structure. Right now, we had a close above, and then look at this. No rejection, zero. Mm-hmm. That's why I'm very convinced that the bottom in bonds is in, not to mention the formation here is just beautiful. Lots of big, thick, engulfing green candles. And also, Bill Ackman came out and said, hey, I covered my bond short. He's been short bonds forever. He said, I covered, which means he bought, he got out. And a lot of people follow Bill Ackman, and Bill Ackman's very smart, very good investor on Wall Street, has been for many years. I think a lot of other people are thinking the same thing. Hey, this is too sexy now to get 4, 5, 6, 7% yield on some of these bonds, which are backed by real estate, better than treasuries, which are just pieces of paper, right? It's backed by the credit of the United States government, which is in question a lot lately. So these pieces of paper backed by real estate, much sexier than those. And there's been a liquidity crisis with regard to these, whereas they're issuing tons and tons of new T-bills. So I think we will see bond prices go up from here. I think rates will go down. And very likely could be pretty violent. I mean, I think we're going to see rates drop very quickly. Now, why is this important, Dan? Obviously, people care about rates. You and I have talked about people who are trying to time the market, right?
Mm-hmm.
Where's the perfect time? When is the absolute perfect time to try to have your cake and eat it too? And I believe, bold call coming right now, Dan, bold. I believe right now, as we speak, this is that moment where we have our first really clear signal that a bottom in bonds or a top in rates has come, and rates have started to come down, but sellers don't really know it yet. Buyers don't really know it yet. So it's not priced in.
Yeah.
So you won't have long before you need to refi, in theory, right? But you can get the prices of the higher rate environment when you buy. And if you want to have your cake and eat it too, that's the only way to do it, because then you get the best price and then you can refi down the road to the best rate. And I think we're right now, Dan, we are right in that moment.
I think this is the first time in the last couple of years that you could really look at what's going on and what's being said by Fed Chair Jerome Powell. And just to kind of bring everyone back, the point that you circled there coincides with the last meeting they had, and what Jerome said after the meeting. And the market said, and I think a lot of experts are out there saying, maybe not necessarily agreeing with you, but saying this is the first time that we've seen a case where we can see rates flatlining and coming down. A lot of people believe we hit the top. Now the question is are rates going to drop really fast? I think we could see a nice movement down, but then I think we're going to see kind of a slow burn over the next couple of years of it slowly coming down. But for the short term, yeah, I think we're in a good position right now for sure.
I really hope you're right about that. I really do, wholeheartedly. It would be so much better for me personally, for the market, for everyone, if rates just slowly came down.
Yep.
And I hope that's the case. But I have a feeling that what you're seeing here is less buying and more short covering, and there's a lot more to go. Yep. And as capitulation takes place, these prices will spike higher, rates will dump lower, and the opportunity to snag those could be short, because that could be a short-term scenario, but the overall trend will have reversed. Mm-hmm. So, if you want to get that perfect moment, it very well could be happening right now. I mean, just look at the relentlessness of going higher. And you're correct. This does coincide with the last meeting. In fact, the NASDAQ is up 8 straight days, also coinciding with the last time we heard from a good friend, Jerry Powell. So obviously, tons of money has been getting put to work. I mean, we haven't seen this kind of money put to work across all markets. Crypto market, higher. Stocks, higher. Bonds, higher. I mean, this is just money getting deployed into the marketplace. We also have, and we're going to talk about this today. I've got on 2 different charts here because I'm trying to be difficult myself. Your next Airbnb host could be a private equity firm. This article is just talking about these private equity firms that are buying homes, Airbnb them in certain areas where that's acceptable. San Diego will be more difficult, but there's certain areas, certain states where they can do that, and they're scooping up huge amounts of real estate to do this because they see the ROI. They're seeing the numbers. These guys have calculators. Mm-hmm. They know what's going on, and they're dumping cash into. So money is getting put to work. I mean, we have inflation. What do you have? You have too much money. So that money, has to go somewhere. And a lot of people are happy with 5% in the bank right now. I talked to a guy yesterday. He was like wanting to buy an investment property. He goes, but I like seeing that interest every month. Sure is nice. Which I understand. I do. I like it too. That's why I have a big cash position right now. Why? Because I like the 5% as well. I do. Mm-hmm. I have like 40% cash right now. It's a huge cash position, but because I like to see that. I like the easy money, the fact that there's some uncertainty out there, but you have to ask yourself this question: are we in an inflationary environment or a deflationary environment? That's the question. Because if we're in deflationary environment, your cash, keeping cash is a great idea. It's the exact thing you should do. If we're in an inflationary environment, it's the exact wrong thing to do.
Yeah, for sure.
So you decide which kind of market. I'm not even going to tell you, but you decide. Do you think we're going to see deflation or more inflation? You think they're going to stop printing money? You think they're not going to lower rates as soon as they get the chance? You think we're going to have some sort of deflationary spiral? Okay. It'd be you and like 4 other people who think that. And you guys can keep your cash. And I hope it works out for you. I really do. But reality is, the Fed is like, it's like a barber. They cut hair. That's what they do. The Fed prints money. It's just what they do. They inject capital. They're supposed to stay busy doing something, raising rates, cutting rates, printing money, bailing out banks. This is what they do. They're going to always be doing something. That's the reason why we always have some sort of crisis on our hands. So this is something we can dive into in more detail. I do want to go over this quick, Dan, and get your thoughts on market profile.
Excuse you.
Right now. Sorry about that. So I always use the same. I always use the same statistics here. Still showing a strong seller's market. Now, from your opinion, working, in the market as an agent, selling homes, do you feel this is an accurate reflection here? Market Action Index is still saying that we're in a strong seller's market.
Strong seller's market. Man, this is such a unique market that we're in today. So strong seller's market, it's basically saying that we're just on the brink of a strong seller's market, if I'm
correct,
reading this correctly.
Right there.
It's tough to say. Like, the reality is we have the least amount of demand that we've ever had in San Diego over the last 15, 20 years. The smallest amount of demand that we've ever had. And so you'd think that that'd mean that we would be in more of a buyer's market. But the problem with this equation is that there are no homes for sale. I know we've been preaching this. We've been screaming it for the last couple of years. But the reality is it keeps getting worse and worse and worse and worse. So although it seems like there are few people wanting to buy homes, there are so few homes for sale that we're still getting multiple offers, that we're still selling over asking in a lot of situations. Yes, there are homes that sit on the market for a couple of weeks. I put in 2 offers this week. One, we got a house the first weekend that it was on the market. The other one, there are 4 offers on this property. So we're still running into these scenarios. So yes, it absolutely 100% still is a seller's market, with a caveat that as a buyer, if you look at things strategically, you aren't going to have a lot of options, but you can make some strategic decisions to get somewhat of deals right now.
I think so. I mean, like, we look at the Market Action Index, it's saying strong seller's market, but look over here at the graph, in the last 3 months, 4 months, we are down from 72 to 61. So that shows it's weakening, not as strong of a seller's market. So it's starting to lean more towards the buyer side, which is good for buyers, good for the people that I work with. I mean, I want to see that for myself and for my clients. Price decreases have gone up. So 38% homes with a price decrease, that's a big deal. Inventory has crept up as well, about 15% or so. Of course, the big stat, the big kahuna, price per square foot. Let's check in with the big guy here. This is how you determine the health of the market. Now, has nothing to do with buyer's market, seller's market, just the health of the market. What are we doing here? You can see very clearly that we're putting in higher highs and higher lows on price per square foot. So market overall, just from a valuation standpoint, if we're valuing the assets of real estate in San Diego, we're going to say assets look strong, look good. From an experiential standpoint of being in the market and, going out to buy or looking to sell your home, I think this is probably the most nuanced, most unique market. I mean, if there was ever a time for realtors to shine, this is really it. Seriously.
Yes.
Like, if you're a buyer, we always say who you work with matters. And it's so true. But my goodness, does it matter right now on both sides of the equation in such a major way. As you said, many homes getting multiple offers, sound like hotcakes, well presented, well marketed, well photographed, well staged, well priced. Just the whole kit and caboodle, those homes, bam. There's some that are sitting. That's also happening. That's why you see the average days on market creeping up.
Yeah.
Some that are sitting. What's happening there? it's one of two things. It's either we have a situation where maybe agent doesn't know what to do, or maybe the seller isn't allowing them to do it. But there's something there that's keeping those things from happening. Maybe people are just pricing too high, thinking, still pie in the sky. I think there's probably less of that going on right now, but it's still happening. Mm-hmm. Buyers, though, just so little to choose from. Dan, this is what concerns me the most. And when I say concerns me, I mean that from the perspective of someone who represents buyers and is a buyer. Yeah. Price is just going insanely high. With this low of inventory situation, as rates come down, as people come back through the cycle, remember, we've got people who sign 12-month leases, and a lot of those people are coming back around towards the beginning of the year. People who just gave up on this market when rates were at that peak last year in October. A lot of those people have come back around as well. As that's happening, rates are dropping, there's nothing for sale, or very little inventory. It could cause prices to go way, way higher, way too quickly. That's my main concern with rates dropping, is that rates drop too fast, too much demand comes in. We just simply don't have the inventory to service that demand.
Yeah, the strength of this market has been unbelievable over the last year and a half, where we've seen rates go from 3% to 8%. And the difference, just for anyone out there that doesn't know the difference between a 3% mortgage interest rate and an 8% mortgage interest rate is, if you are buying $1 million home in both scenarios, the 8% interest rate is going to end up being about 50% more on a monthly cost basis for a home that you're putting 20% down on and taking out and financing 80% of that purchase price. And you could correct me if I'm wrong, because I'm sure it's a little bit more nuanced than that. But the fact that affordability has gone down by that much, and we're in, I think we can probably agree, the most unaffordable time to buy a house right now. And I don't say that lightheartedly. It's so ridiculous that this has happened, and yet prices haven't come down. There's obviously only one thing that's going to happen when rates do come down and when affordability goes up. Because you and I both know so many people that have been sitting on the sidelines. And I think here's the key, Derrick. The key is, I know we don't want rates to come down too fast, but the other fear I have is if rates flatline until next summer, then we're not going to have an opportunity to get more inventory. By May, June, people are going to decide whether they're going to sell their home or not next year. Not everybody, but this is the key thing is we need more homes for sale. And so if rates can come down enough to where people are willing to sell their homes again, and that happens before the summer rush, I think we're going to be a lot better of a place. But if it happens later, then we're going to be screwed, because if rates start to come down during summer, late summer, we're still going to be the scenario with no homes, where we have so many more buyers out there.
Well said. Well said.
That's nice. I like the applause. All right. Yeah. I'll come back on for the applause anytime, Derrick.
I got to play with these buttons every once in a while. I loaded them up here for a reason.
Yeah.
Okay. So, and you're right, that sellers will come actually with lower rates, which is a huge bonus. A lot of those are sell buyers. So they kind of cancel themselves out from an inventory standpoint, but they will create more activity. They will create more transactions. They will create more opportunity. Let's put it that way. More activity, more opportunity for people who are well represented and attacking the market appropriately. I want to go back to what we talked about earlier. Okay, mortgage rates plunge and demand inches back. What we're saying here is that rates have started to come down. This has been acknowledged. This is one of the first articles that we've seen that really says that. And a little melodramatic. I had some people call me, hey, I heard rates drop big time. Like, not really, but yeah, it's looking good. It's looking better. They haven't gone down crazy, nothing. We got out of the eights. The first second, we had a lot of eights on the board. And now
there's something about the 8 that just feels so different than the 6s felt and the 7s felt. The whole time it felt like, ooh, we better not hit that 8 marker. And we did. So yes, it hasn't been a huge drop, but from the mindset of a buyer, it feels like it's significant.
It is. I mean, 8, on its side is infinity. I mean, that's what people see. It's just,
that's right.
It's just too much. It's too much. This is something I wanted to get your opinion on. So we saw this lawsuit with NAR. Cost of home buying and selling will change. This is a link to check, to click if you guys are interested. I put all these links in the YouTube description. Check this out. This is very interesting stuff where, they're basically saying, hey, the seller shouldn't pay the buyer's agent, the buyer should pay the buyer's agent. And that's how this thing should work. And I find this whole thing so silly, but it's not anymore. This isn't a joke. Like, there's a ruling against the National Association of Realtors. CEO has stepped down. A couple other big real estate firms have settled previously, for tens of millions of dollars ahead of time, expecting to lose and be attacked by this. But there's huge lawsuits now. Of course, the ambulance chasing that takes place after something like this is started to go nuts. Brokerages being sued, kinds of nuts, just crazy stuff. What are you hearing? What is your broker saying? Like, do you have any insight into what to expect with this in the coming months or years?
Yeah, and you laid it out really well. It's very interesting what's happened. So this has been a long time coming. The court cases ensued, and what was interesting from my perspective is all of the perspectives that I was getting from how the court case was going and what the testimony was like. I think it kind of was extremely surprising to a lot of people that the ruling went the way that it did and that they made their decision so quickly. And so the nuance of like the situation along what you just said as well is it's not just saying that buyers should pay for that commission. It's saying that listing agents conspired and tried to keep prices regulated. And so that's mostly what the case was over. But the end result is going to be, all right, so then how do we move forward? And I think what's very likely to happen, which is kind of what you're referring to, is that we'll be in a scenario where the sellers are not allowed to upfront offer a commission. And so that feels really weird to us. Upfront not offer a commission to the buyer's agent. So they'll still be in agreement with the listing agent, but they're not going to, like right now, you can go on Redfin today. If you aren't a real estate agent, you can go on Redfin today. You can see what the seller is offering for the buyer's agent. That might be a thing in the past. I think that's very likely that that's going to be the scenario. And it's interesting. It's, I guess, a little bit scary as a real estate agent because we don't love change. But here are a couple. We don't know exactly what's going to happen. Here is what you can expect. It's going to force agents to become professionals. It is too easy to become a real estate agent in this industry across markets, but it is not difficult to get your real estate license. Right now, currently, there are 30,000 real estate agents in San Diego County, and there were less than 2,000 transactions last month. A lot of those agents are not professional. They don't know what they're doing. They don't have the experience. And what I like about this scenario is it's likely going to push out a lot of those part-time agents that never took this seriously, because this is now another hurdle that we're going to have when we're trying to help people buy homes. No longer, I mean, we should have never done this in the first place. I never did this, but a lot of agents go out and tell buyers, you don't have to pay me a penny for my services. It's all free. Well, that's funny because the buyer's writing this huge check and wiring all this money into the account of the seller that is going around, turning around and giving the commission to the buyer's agent. So of course there is money being handed over and it's coming from the buyer. It's just in a roundabout way. So some things are going to change. It's going to force agents to become better. And at the end of the day, I think the US and Canada, I believe, are the only places across the world that have it set up the way that we currently have it set up.
Really?
So it's going to be fine. We're going to find out a way to make this work. But I like the fact that it's going to force us to get better at what we do, to do a better job of explaining what clients can expect from us. And it's going to be better for everybody.
I think you just made the best argument for why this ruling is so stupid, because the buyer really does pay. At the end of the day, like if we were on trial and I was the attorney playing Lincoln lawyer here, I'd be like, and so who paid you to help find the buyer for this house? The seller. And who gave the seller the money?
Yeah.
Oh, the buyer. I mean, it just seems so silly to me that this is even a thing, but it is, and things sound like things are going to change. And I think that it's definitely big advantage to listing agents.
Yes.
Listing agents, huge advantage, which they already had. It's going to increase. Big listing agents, big teams, huge advantage to those agents versus like buyers agents, or people who just work with buyers or mostly work with buyers. They're going to have a lot harder time of it, especially if they have to negotiate getting paid directly from the buyer. That will definitely make things more difficult for them. No question about it. So time will tell. They are appealing the case, by the way. So this could drag on for years. It's totally possible that 2 years from now, we could still be talking about this.
Yep.
But things are changing. Change is coming.
Well, look, there's one person that made out in this court case. You and I both know who it is. It's the freaking lawyer that is getting $750 million out of this settlement. And everyone else is getting, next to nothing. Like it's crazy how this all plays out. So yeah, I don't know. It's going to be interesting. We're definitely going to keep an eye on it. At the end of the day, I don't think it's going to change much for the consumer, because right now, today, you as a seller, you as a buyer, you can decide who you want to work with. You can sell a house yourself. You can find an agent to sell a house for 1% or not offer anything to the buyer's agent. Like, you have those options here today. So there's not going to be that much that changes. I know, even if as a listing agent, if my seller isn't allowed to market up front how much commission they're willing to offer to the buyer's agent, I know it's still going to be a part of our discussion. There's not going to be any part of our discussion when I'm representing them and telling them what to expect in this process and what they're going to net from a sale. Of course, I'm going to discuss, here's probably what we should anticipate to offer for the buyer's agent, and here's how that's going to play in. So it's interesting, but it's forcing us to work harder to figure out how to do everything the right way.
Yeah, how to put deals together. It also is another hurdle for home ownership, which is really sad.
It is.
People, who are just barely getting into homes. This is going to take them out of the game. I think there will probably be something creative. I imagine something creative will take place, whether it's on the financing side or through state programs or whatnot. Something creative will take place to help bridge that gap. I hope, and I expect, because there will be an opportunity there, and so I expect to hear that. This is what we were just kind of talking about. Central banks look to have hit peak rates. So here's how markets think they'll come down. And essentially what this says is that, U.S. Federal Reserve, European Central Bank, Bank of England, they all hiked interest rates a lot over the last 18 months. But all three kept rates at pause in most recent meetings. And market pricing suggests that there's varying quantities of cuts at some point next year. So if you want to know why, Dan nailed it earlier. Hey, when Jerry Powell spoke, things changed. Well, look here, this is the S&P 500. We had a nice uptrend going, and then it started to get a little rocky. We actually busted through that trend line. That's very ugly. That was right before Jerry Powell spoke last time. Now, since then, what are we doing? Just gapping up, just going back inside the channel. So you can tell it was sort of priced in that the Fed might say, we need to raise a little bit more. We're not quite done. I got to see, we might have to bring the heavy hand. Market was sort of expecting that. When they go, no, we think, we're going to sit tight, zip it, see what happens. That becomes bullish. And so you're seeing all this money get put to work that was on the sidelines, scared money has come back into the game. And that has pushed the S&P 500 back into the upward channel. So for those of you, your 401ks, you've been watching or don't watch, it's best not to look. I tell you that right now. Best not to look. Best thing you can do is don't look at it. Just keep putting money into it. But if you do, you've noticed that it's come back up.
This is not financial advice, by the way. We have to say that, right?
Not financial advice, but that's what it is. All right. A couple more things here. Economic calendar this week is pretty light. We've got jobless claims on Thursday, tomorrow, before the market open. Jerry Powell is also going to be speaking at an IMF deal at around 11 p.m. or 11 a.m. our time. Nothing too crazy going on. Here's three things here to cover yet, Dan. This was interesting. Now, this is a national survey. So Fannie Mae does these surveys, and they provide these different data points, if you will, throughout the year. And it's very interesting to me to see it. With this one, what was really interesting to me was this is actually a survey record. 85% of consumers say it's a bad time to buy a home. 85%. Hated it. Wow. That is a lot. Okay, so just to give you, let me break that down a fraction. That's 6 out of 7. So every 7 people you talk to, 6 of them are going to say right now is a bad time to buy a home. Why would I bring this up? Why does this matter? Because sentiment is a perfect, in my experience, sentiment is one of the best indicators of them all. If you look at, and I don't know if you were around for the back in the day, Dan, when the market crashed, but in 2009, 2010, I was doing a radio show. We were talking about real estate every day, and I had agents coming in, and they would tell me they would bring their list. They'd have a huge notepad full of all their listings. I mean, just I got this one. I got this. Like, what do you need? I just need a buyer. Nobody wanted to buy a house. And it was the absolute best time to do it. The absolute best time to do it. And people were like, I got 12 listings. I just can't find a buyer. I can't find a buyer. I don't know. I don't know what else to do. I've got all these homes. I got them staged. I got this. What else can I do? And I heard the same thing over and over. And so that's just one example. But in any market, when you are looking to buy something, if nobody else wants it, that's when you can get the best price, right? The less buyers, the less competition, the better price you're going to get. If you want to be in a market where everyone wants to buy, whatever that is, I don't care if it's razor blades or toothbrushes, it doesn't matter. If everybody wants it, the price is going to be higher. And so I think this type of sentiment data is very, very conclusive. It is, to me, it's confluence for my belief that right now is, even though it doesn't seem like it, is probably going to be one of the better times in the next 10 to 15 years to buy a home. And it's just so hard for people to swallow that. You know what someone told me recently? He said, well, median income and home values have diverged, and homes aren't affordable for people with median income. And so prices have to come down. That's what's going to happen. Median income and home values must move together. And now this was an online situation, commenting, keyboard warring. But essentially what I told her was, listen, that's not how markets work. I'm sorry. If you believe that the market is going to come to you, in other words, you're just going to sit around and go, you know what? It's too expensive for me. It needs to come to me. The market needs to do what I want it to do. That is not how markets work. Markets work on supply and demand principles, and that is literally it. So there's nothing else you need to think about. And median income has nothing to do with it. Why did the housing market crash in 2008? Abundance of supply. So if someone believes the market's going to crash, the only question you have to ask them is, where's the supply going to come from? You're going to need a lot of supply to crash your market. Where is that going to come from? And if they don't have a reasonable answer, then you should just ignore that person. They're not a serious person. They haven't thought about it enough. You must know, if you're predicting a housing crash, where all this supply is going to come from. And it has to make sense. And so that's the struggle for a lot of people. Now, if we look at that in conjunction with sentiment indicators like this, for me, Dan, I think it's bullish. I do. I know people will say that's counterintuitive, but when most people think it's a bad time to buy something, that's when I want to buy it.
Yeah, it's an interesting way to think about things for sure. And just to go back to what that one person said about median income, yes, it sucks being in this industry when you can feel the affordability getting ripped out of potential first-time home buyers. They're making decent money, and not even decent money. They're making like pretty good money. Now, I guess the caveat of that is something that we've mentioned before is like, you know what? Maybe it's not that you can't buy a house, but it's, instead of buying a single family house, you need to start with a condo or a townhome. Like, that is just how it works in stronger markets. But the other aspect is, all right, if you're thinking that home values need to come down to where median incomes are at, well, think of this. There are 3.3 million people in San Diego County, and only about 2,000 homes sold last month. So what's the percentage of that based on our population? Like, less than 0.1% of the population bought a home last month. Mm-hmm. So we're talking about literally not even the top 10%, but the top less than 1% of people are buying those homes. And then the other way that you can split this down as well is,
great
like,
point.
We're just talking about all the homes that sold. If you look at, 30 to 40% of the properties that sold that were at the cheapest price points, those are condos, those are townhomes, those are neighborhoods that are, a lot of people would consider starter neighborhoods. And so those are average income earners getting their foot in the door. So if you break it down even more, then it's like less than half of 0.1% of people in San Diego County buying a house every year.
And that was, I continued in that same discussion, Dan, kind of going in that same direction of, listen, if you believe that the market is there to serve you, in other words, you think that everyone's going to be able to own a home, you're delusional. And I hate to be the one delivering this message, but this is 10 straight years in a row now I've been talking about this. In the future, and I mean the near future, we're talking 10, 15, 20 years tops. And it's really, you could say we're there now already. Only the rich will own homes. The middle class is being sort of shoved out, squeezed out of the equation. I know people who make $100,000 a year and can't buy a house. They just can't make it pencil.
Yeah.
Not in this market, not by themselves. Middle class being shoved out. There will be rich, there will be poor. Rich will own real estate, poor will rent. And I'm sorry to make it so simple, but this is what's coming. And I'm trying to wake people up because we're not necessarily there yet, but this is the direction it's headed. This is the direction it's been heading since the crash.
Yeah.
And a lot of it has to do with these things, which are which are happening very slyly. and Robert Kennedy Jr., I don't know if you have followed him at all or not, but
he's very interesting.
I really like the guy. He's done such great work against big corporations, and he has done more research about corporate ownership of homes than anyone I've ever seen. Now, mind you, this is a guy who has fought like big pesticide companies and chemical companies in court and won, like literally hero, and for the people. And he was talking about this. It's like, you have no idea how many homes these corporations are purchasing and what they're going to do, what their plan is with this, and how it's going down. So I'm probably the only person I ever see talking about these things, but other private equity firms, publicly traded companies like Innovation Homes, many institutional investors have been actively buying single family homes for years. Okay, this isn't brand new. This has been going down for like 10 to 15 years minimum. It just came on the map when the crash happened, and all of a sudden there were these private equity firms fat with cash who are buying homes by the hundreds from these asset managers. How'd you guys pull that off? It's like you knew it was coming. And so they've been doing this consistently. So interest rates, they don't care about interest rates. So this is one of the conspiracy theories, if you will, about interest rates staying higher, is that it's better for cash buyers.
Yeah.
It's better for institutional money. They don't care about what the interest rates are. It doesn't matter. So it's just something that I want everyone to be aware of, so that you're either going to say one or two things. I'm glad we heard this guy talking about this. It really woke us up. We took action. We did something for our family, for the future of our family, future generations of our family. Or, damn, we should have listened to that guy. Look what happened to us now. It's one of the two. I mean, that's 20 years from now. So I just want to sleep at night. And I think the best way to do that is by talking about this and making everybody aware of what the goal is long term. And it's not for the market to come meet you at the price you want. It is the opposite of that. And if you think that day is going to come, if you're just waiting for that day, you may be that skeleton in the window looking out that's waiting for that day. Like, that may be you. And meanwhile, you're going to throw away hundreds of thousands of dollars in rent. And that just makes me sick. It makes me want to puke. So hopefully that's not the case. All right. Man, Dan, one article remaining here. This is an important one because in tougher markets like this, and particularly what we were discussing with the future of real estate and buyers potentially having to pay their buyer's agent commission, meaning they're going to need more money out of pocket to execute a transaction, this could become an even bigger thing. Now, Keeping Current Matters, I think, is a really good resource for professionals, but they have consumer-oriented blog articles and things like that, like this one. They're very conservative. And so I can appreciate that, the fact that, they're saying, hey, listen, be careful about using your 401k. There are potential tax liabilities. You're robbing from your future retirement. You have to keep all these things in mind. And I think it's great to be cautious about doing these things. But it's also something to not forget about. It's something to realize that you may have the ability to get a loan from your 401k, pay yourself back. You're paying yourself back. I mean, like, that's That's the best kind of debt that you could have if you're going to have one, or taking money out. If you need to bridge a gap, if it's your only resort, I think it's perfectly okay. You see this happening a lot with buyers, Dan, or what's your thoughts on this?
Yeah, this is an interesting one, especially for our market. And like we were mentioning before, it's obviously it's very, very difficult to become a first-time home buyer in San Diego County. And a big part of that reason for a lot of people is not how much money they're making and how much they can afford, but how much money they have for the down payment. And I know a lot of people focus on 20% down. You don't necessarily need 20% down, but just depending on what your goals are and how much you can comfortably spend every single month, that number can go up and down. And look, this is another tool in our tool belt. There are options. There's no one size fits all. This is perfect for everybody. This is a tough one because I know personally some friends that have gone down this path and they ended up making a poor financial decision. But looking back, they also made poor decisions after buying the house. That really is what would put them in. And that's the only person I know that's ever been down that path. So yes, you need to be cautious. It's just kind of like when I talk to buyers about this market and buying a home in this market. Look, my wife and I bought a home 5 months ago at this point. So we're in this market too. And we bought with high rates, maybe not quite as high as they are today, but we bought with high rates. And I think one of the best kind of mindsets to have is like, it's likely that rates are going to come down. But if rates stay the same for 5 years, or if they go up, then I can still make this payment work. It's a little bit uncomfortable, but I can make it work. And I think that is, unfortunately, in this market, that's kind of the mentality that you not necessarily have to have, because some people will be very conservative and they have the opportunity to do that. But in order to get what you want to be in the neighborhood that you want, I think most people end up pushing a little bit more than they originally felt comfortable. And at the end of the day, at the end of the year, at the end of their time in that house, they're glad that they did, because a lot of us, especially people that can afford these homes, they've made a lot of good financial decisions to get to that point, and they're hopefully not going to allow themselves to get into a situation where it's going to be a poor financial decision down the road and they have to sell or something like that. But out of the last 100 clients I've worked with, only one has been in that scenario. So strong majority of my clients have gone down the right path.
Yeah, it's a tough one because I feel like I must advise everyone to be as cautious as possible and not give financial advice, and say, talk to your advisor, talk to your CPA, talk to your parents, whatever it is. But like, be careful about this. But me personally, I'm hyper aggressive on this because, I would, without thinking twice, I would use my 401k to buy a house, because my thought process is very basic in the sense that I feel like the only thing you really must do for your retirement strategy is own a home. If you can make sure that you do just that one thing, then you're going to be okay. You'll be okay. But if you don't own a home and you save $1 million, I don't know if that's going to be enough or not,
That's a very good point.
I don't know. Right. But if you own a home and you don't have a house payment, and you've got your real estate taxes locked in at a rate from today and not tomorrow, you're going to be okay. I know that. And I know that the retirement age coincides directly with paying off your mortgage. That's the statistics on that are insane. It's like direct correlation. And people deserve, to have that option if they want it at some point. So I'm much more aggressive personally in the mindset of, house greater than 401k. But I do understand the idea of being careful, and not just willy-nillying away your retirement into a home that you are just okay with.
Yeah.
So,
well said. Well said.
Really appreciate you being on.
Applause that you can give us again.
What's that?
I said, you have that a little applause that you can give yourself.
Oh no, I got a better one. Check, please. Did you hear that?
No. Check, please. Oh yeah, there we go. Check, please.
All right, this is Dan's YouTube channel here. I'll put this link as well in the description below. You can see he's way better at thumbnails than I am. Look at that.
Spend way
shorts,
too much time on thumbnails.
everything. I spend 0 time.
In fact, you want to hear something cool? Every single thumbnail that you see right there, my last 9 videos, all have an AI generated image as my backdrop.
No way.
Yep.
Dude, they're crushing it then. Whoever's doing that for you.
Yeah, this guy.
That's crushing. That is crushing. So you got shorts on here, a bunch of neighborhood videos, whole bunch of content. There's funny stuff on here too. I mean, you guys are doing everything the right way. So follow Dan, check him out if you want real estate content or interested in San Diego real estate. Definitely check him out. Dan, appreciate your time, my brother. As always, we'll do this again soon, my man.
Sounds good. Thanks so much, man.
All right, takes care, brother. I'm going to close this out here with a little music. And, of course, a little promo. Hey, get a free loan quote. You don't need to pull your credit. Just tell me what your score is. Figure it out from there. Call, email, text. Your boy's going to hook you up like a tow truck. Wholesale home loan rates, no vendor fee, 0. Nada. I don't pay none of that around here. I got you. Got you covered. Have a great evening, my friends. Hope it helps. You know where to find me if you need.